Shelley, here we are one more time for another segment in our contractor liability insurance series. On this one, I thought we could dive into the concept of a hard market. I've heard that term over the years on and off, and I know you brought it up here.
Yeah.
I've heard it from our broker, and you brought it up in some of our prep for this series. So
Sure.
Could you start off by just defining a hard market in insurance terms?
You bet. Okay, so we have hard and soft markets. In the insurance world, it's a financial tool product. It's all financially driven. They are for-profit companies. And it's cyclical, and it's actually directly impacted mostly by the natural disasters and things like that. How do they recoup their money after something like that? You talk about big hurricanes and all that property damage has to be paid for, right? So it's a give and take pull, and it's cyclical. I've been doing this since 1983, so I've ridden out hard markets, soft markets, and so forth. And it's just always going to happen. So even if the stock market stays flat, it's driven by more than just that financial investment type portfolio. It's also driven by the amount of property damage that they're paying for. So it's going to be driven by that, like I said, the natural disasters and things. It's cyclical. And this time we actually went quite a long time between the hard and soft market. So the last really bad hard market we had was in the early 2000s. And then we had another dip when the economy tanked. And it got kind of bad after that for a while. So it's been a long time. It's usually, 4 to 5 years or whatever, and then boom, here we go again. So
Interesting.
The soft market, you can buy coverage pretty cheap. The forms are pretty flexible. You can pretty much get what you want pretty easily. Anybody can sell it. It's pretty foolproof for the most part because there's not too much to be worried about. Hard market, which is what we're definitely in now. And we really started seeing the market hardening in the 2019, 18, 19, and 18. Yeah. Then it took on a whole new life of its own when we got into COVID and the riots and the political election, Chauvin, BLM,
everything.
Imagine that, and
it
the
all
media.
Has an impact.
Yes, the media showing, cities burning down. Well, none of it looked like that really. But, the image and projection of that sparks fear. Media-driven fear is killing it, right? So, the underwriters, they sign their name on things and they're going to lose their job if their loss ratio gets too high. So imagine if you're in a hard market, so availability is slimming down. All the carriers are pulling out saying, well, we're not writing anymore. We've decided we don't want to write contractors anymore. So now where we might have had 20 carriers a year and a half ago, we've got 4. They haven't hired anybody. They're all working from home, right? So, and they've got 100 apps to choose from that they want to work on that day instead of 10 or 15, right? So they're going to go to the ones from the agents they like and know and have a good hit ratio with, just on down the line. So, and they're also fear driven. So they don't want to lose their job. So who do they, what makes sense? They're going to go for the least risk that they possibly can for the highest dollar. Because again, they only have so many millions they can give out at 2, right? So more exclusions, limiting things. And if you get into if you're forced into the surplus lines market, it could be all bets are off. One, like I've mentioned in another segment was, they can slip in a knot into something and it's not covered. Instead covered. And that's all it takes. One little word on one page in the policy, 180 pages of policy terms and one little knot. Yeah. And there's nothing you can do. So hard market, we end up more in surplus lines. The admitted carriers are like, and they're tightening up.
So what can a client/contractor do to maximize their chances of getting renewed in this hard market we're in?
First of all, get started early because nothing's happening fast now. And that's a real struggle for us as the brokers is that everybody's expecting that immediate turnaround. And so they're calling and giving us no time and not expecting us to say, well, what took a week is now taking 6 because the underwriters are super busy and they're working at home and they don't call us back. So, or we're being told tomorrow and 3 weeks later, we're still being told tomorrow. So getting started early is critical. And then it's that tooting your horn. What have you done to prepare for the worst and what's going to happen? And, are you setting aside reserves? And that isn't so much now, but last year that was a huge deal. We didn't know what was going to happen, right? The COVID plans, things like that. But what have you done different? Did you have to lay off a bunch of people because of what's going on? Or do you have a plan to hire them back? Or how have you redistributed duties? And how are you retaining your sub base? I mean, subs, that's a constant complaint I'm hearing right now is, we can't find subs. So that scares an underwriter to death. So you're using the cheapest guy on the street now because the only one you can find, the only one who isn't working are the bad ones, right? So that kind of thing. And then permits are delayed and things. So all the projects are off. And the material costs, as you well know, are way higher. So they're still trying to fit into the budget that isn't practical anymore. And they're going to skimp everywhere else. So, what are we doing different? How are we scaling back to compensate here and there? We see the budgets. That's the thing. So I look at the budget and I see the line items. I'm like, I already know they're when I see insurance line item is 10,000 and I know they're at 100, I know they're making that 90 up somewhere else.
So it sounds like the carriers are really interested at the end of the day in the financial well-being of these construction companies.
It's true. Because somebody who's not financially sound is going to do bad things.
They'll do
desperate
bad things
people do desperate things.
Or just go out of business and not pay their premium. And everybody gets hung out with some bad debt or all of the
Or they're just missing, they're too stressed out, they're miss things or whatever. It just is a recipe for disaster.
Okay. Hard markets, no fun, but...
I excel in a hard market personally because I know how to get around and how to navigate it. It weeds out the riffraff is what I always say.
There you go. Well, thank you. Very interesting topic.